Welcome to the WA Property Q&A, the podcast where I explore the ins and outs of buying property in Western Australia. I'm your host, Peter Fletcher, and each week I interview local property experts to help you to develop a deep understanding of the nuances of buying property in WA. From market trends to legal considerations, no topic is off limits. But before we dive in, a friendly reminder. While we provide valuable information, it's important to note that nothing discussed in this podcast should be construed as personal investment advice. Always remember to seek the appropriate professional advice for your specific circumstances. Now, let's get started and unlock the secrets to successful property buying in WA. So, welcome to another episode.
Hi.
And welcome, Nick. It's good to have you back. And for those of you who visiting for the first time, tell us a bit about yourself.
I'm Nikki, and I now own and manage Rezzi Strata.
Yes.
In partnership with you, Peter.
Oh, my God.
And we've set up a strata management agency to try and change the way things are done and make the industry a little bit better, lead by example.
Yeah, cool. So you've been doing strata for yonks now, haven't you?
A very long time. I'm actively involved in the Rewa Strata Network Committee. So, I advocate for the industry and ahead of the game with legislation. I've just finished my Certificate 4 in Strata Management, which is offered by Rewa at the moment. And that'll be coming into the regulations soon as an education requirement to work in the industry. So, although I had the 20 years of experience, I still had to RPL my way through and get a Certificate 4. I advocate for running as a licensed agency and the benefits for the client that come with that. Just been around a long time. I've managed properties all over.
Nick, you've managed some big properties, haven't you?
I have. And we're starting to win some of those clients now, where our portfolio growth has been, although organic and word of mouth at the moment, happening very rapidly. It's been a very good response. So
you're a bit freaked out about it.
Yeah, I'm a little bit overwhelmed, but we've got the right software and systems, and we're trying to automate and really have our SOPs in place and really leverage my ability to do the client-facing work and have it all operating very smoothly and consistently for the clients.
Mm-hmm. What would be the biggest development that you've managed, that you've been a strata manager for?
That would likely be Mantra on Murray. Mm-hmm. So that is known as Pacific International Apartments. It's 252 lot scheme, and it had split grouped budgets with part hotel lease, part residential, part commercial. And that was one of the bigger, probably more complex. It was a bit older as well, so lots of things to think about with that. And then some other interesting and complicated schemes would include Bunker Bay Resort, Freycinet Estate. They're quite well known amongst the strata consultant world because of the intricate bylaws and budgets and things that come with them, and the mixed use of, including leases and hotel operators and things like that on top of your day-to-day strata and residents.
Yeah, so a strata, like a set of accounts, would just usually be broken into admin levy, reserve levy, or admin fund, reserve fund. But in this case, it's a whole bunch of others. Is that right?
That's right. And because they weren't set up as community title, because that didn't exist at the time, they're set up as a strata title, which means to be able to group budgets, you need bylaws in place to determine what the unit entitlement is per area. So as example, the hotel might pay for certain things in the budget that the residents do not, and they'll have a certain unit entitlement, and there'll be grouped and split budgeting requirements for those. But we do like, our standard, 12 lot schemes with a very simple budget of maybe 5 to 10 line items and very, simple and easy to manage. But they can get quite complicated with the groupings, and I think the commercial and real estate experience comes in really handy when you're dealing with things like, further leases and license agreements in place and hotel operators and the terms and things that the strata company are then in contract for.
Mm-hmm. Mm-hmm. So in terms of the like smaller developments, quite often it seems that those small developments, they have their own bunch of standard kind of questions that would come up from people. Is that right?
Yeah, we're talking residential more so here because we
Yes.
obviously do a bit of commercial as well, and you do get a very different type of client or customer or owner, I should say. Lot owners varying from the residential to the commercial strata and the type of questions that will come from it. When you're dealing with residential, which is probably the most common type, people are often downsizing from their McMansions and not used to or understanding that there are rules in place and legislation in place and that they need to make applications for things like installing a patio, as example, which was one that came up yesterday.
Okay, so let's say I wanted to install a patio. So my nephew, this is actually a good question because my nephew owns a property in a group of 8. He's got his lot boundaries is a courtyard, so it's included as part of his lot. What like things does he have to do before he actually goes and gets the patio done?
Look, there is always, in this instance, I would always give the owner some information about what requirements are for structural alterations to a lot. There's, from Rezzi Strata, we offer a bit of an FAQ and some information and some guidance on how to, and a solid application form, which will guide them on the process that's required. The easiest way of thinking about it is, one, if you're drilling into common property, it's going to be a structural alteration and it's going to need to go through the legislative process. If it needs local council approval, like the installation of a patio or something like that, then it's likely you're going to need your strata company's approval as well at a general meeting.
Okay, so if he's going to construct a patio, he's going to need a building permit, is that right? That from the local council?
More than likely. So I can talk on the local council side because I have been in that field before too. But what we would generally ask for from a strata perspective is, depending what it was. So in the instance of your patio, we would ask for the contractor's details and scope of works, the materials being used, including the colours and what the structure is going to look like, designed to ensure it's keeping with the scheme and it's going to fit, that the contractor has the appropriate insurances, that if council...
So this is from the strata side of things?
From the strata side of things. If the local council requires an approval, that they've obtained that approval from the local council to make the installation. If it impacts any other lot owners, that we have written submissions from them to say, confirm their agreement, or otherwise. We would sort of survey and assess from there. Some strata companies, and depending what it is, may have bylaws in place that allow for the council of owners to make these kind of decisions, but more often than not, it would need to go to a general meeting and require a resolution without dissent. There was a case in SAT actually just recently, and Mark Atkinson just had the good outcome for the owner. But as an example, it was down south. He wanted to build a patio or shed for his boat as a holiday home to leave it as storage. One lot owner dissented. They brought it to SAT and they were able to get it approved because it wasn't of substance. The dissent wasn't reasonable of substance. But, that does take legal process and things like that. So
are you saying that in my nephew's case that he would have to wait for a general meeting? So like the AGM's just been had?
They would call an extraordinary general meeting, or, now with electronic voting and things like that, they could probably do it by an electronic vote, an electronic meeting. But yes, it would likely, for what he's looking for, depending on the bylaws, depending what exactly comes through the application and assessment, it would likely need to go for a vote, whether that's electronic or a physical general meeting.
Really? Okay. So, right. So it would have to go to a vote of all the members.
Without dissent.
Without dissent.
Yes.
So everyone's got to agree to it.
That's right.
Is it?
I mean, the thing that people don't get their head around or understand, I guess, is, like the instance of this person I was speaking with yesterday who had the concerns. She's coming from, a big 5-bedroom home on a big plot of land where she's been able to do whatever she wanted and didn't understand or realise that buying into strata came with certain responsibilities and obligations and requirements and rules. So, it took a bit of discussion and educating, empowering her. I also take the approach that we need to practice some common sense. So, as the strata manager, I would actively engage the community, discuss it, maybe set a precedent, etc. Really work with them to help get everybody on the same page. This particular scheme, it's a 12-lot scheme of single dwelling, but detached, and they would likely like to put their patios and awnings up. So, and it's a brand new development, so it's likely that there's going to be many of them wanting to do that.
So let's say that. And we're doing hypotheticals, I know, and that's a bit hard, his lot boundary is the front courtyard. It's a substantial little courtyard. Let's say that he didn't want to drill into any common property, just wanted to put a patio and maybe a swimming pool in there.
Again, those sort of things would require local council approval. So the best thing to do is make the application through the strata company to be assessed. And it's likely that it would need some kind of approval process. But in saying that, under the legislation, there's also keeping with plot ratio, and don't quote me on it, but if you're covering X amount, it comes down to the planning regulations and things, which is why local council approval is also required to get these things through.
What if he just wanted to? He just said, "Well, I'm not even going to seek council approval, as in strata council approval or strata approval. I'm just going to go ahead and construct it, sort of ask for forgiveness, not permission."
We would probably request, just like a local council would, that we do a retrospective approval process, and it could be requested for it to come down. If it was an issue and disputed, it would likely need to go through mediation or the state administrative tribunal to determine what would happen. But, retrospectively, getting that approval, is it harmonious and a good community member doing that kind of thing? Are you upsetting the other owners? Are they not bothered and they're happy to do it? And it's just, getting it done, and then the retrospective approval goes through, fine. The other thing to consider, interestingly, as well now with structural alterations and things, if it does impact common property, it can be required to come under the 10-year maintenance plan as well. So consideration that if you're constructing a patio that, drills into the common property, which might be the external wall, that may then need to be considered, one, with the strata building insurance, so the valuation sum insured, and two, also included in the 10-year maintenance plan and reserve fund forecasting. So it's quite a complicated, yeah. Okay.
It doesn't sound like much fun.
No. So it's not much fun for the strata manager either, I can assure you that.
Yes. So, what if the thing they wanted to do, it was on their lot but didn't involve any sort of like visual, like no one could see it.
It's as long as it's not an alteration to the structure.
So long as it's not an alteration to the structure. Right. So if it was freestanding patio, if it was a freestanding.
Not installed in any way, like.
No, it was installed, like if it was 4 posts concreted into the ground but separate from the building.
Look, I would be determining from the surface boundaries from the ground, because if they're going below, they might be going into common property or they might be going out. So it really does take a bit of an assessment and guidance from your strata manager with regards to interpreting the strata plan and understanding exactly what you need to do. But like I explained to people, it's not that it's going to be a straight out no or anything. It doesn't. We don't have to overcomplicate the process, but help us educate you along the way. Start with a scope of works and a design.
Interesting. Now, one of the questions I hear a lot is why, and this is the case for my nephew's building, is like his strata levies are about $1,600 a quarter on an 8-lot scheme. Like, why are they so expensive?
Okay.
What are the parts in there that would make them expensive?
Well, I'd need to look at the budget, and that's the first place I would direct people when they say, often people paying strata levies because they're paying it to the strata manager, they think that's your fee, which is not the case. Your fee is a very minimal portion of that levy. That levy entails things like insurance costs, and usually they can be high if this is like an older building that might have some requirements on insurance that the premiums are going up and higher. That can be a big cost factor. You've got things like common utilities.
Insurance is quite high, isn't it?
It depends. It depends on the building. It's obviously, I can't give insurance advice, but obviously it's assessed building by building and on the terms that they do. So, for example, if there might be asbestos or no registers in place and no management plans in place, it might come at a higher premium. If there's been lots of claims for a certain thing, then it'll come at a higher premium or a higher excess, or it will just not insure. It'll have exclusions in your insurance policy. So insurance can be quite a big factor, and usually it is. Can safely say it's usually the biggest cost per annum to the strata company. Then there's, like I said, common utilities, whether there's sub-metering and things like that. There's still always going to be a common supply. So often people will say, but I get my electricity bill from Synergy. Yes, but there is still another meter that's powering the common areas. If there is amenity, if you've got pools and lifts and things, you've got to think of the maintenance and running costs of those things. Fire safety standards, garden maintenance, your lawnmower man, all the things that are taken care of for you in regards to the common property and the building and the administration of the scheme.
So in terms of common property, a lot of people forget that the common property needs to be maintained in just the same way as the driveway in your house, if you owned a freestanding house, that needs to be maintained. Your verge lawn needs to be maintained. And all of those things come at some sort of cost. If you own your own home, it's just that you don't sort of realise it because you're sort of paying it in dribs and drabs throughout the year. Whereas with common property maintenance, it's like there's a contract in place for somebody to come along and do this stuff.
That's right. And it's got to be insured, because you've got to consider, like talking the common driveway, you've got to have public liability insurance, because say the neighbour at Unit 2 has a visitor that comes and trips and breaks their leg on the driveway. They're going to sue the strata company, and you need to have your public liability insurances in place.
Yeah, I've actually seen that happen where a lady, where we were at 443 Albany Highway, it was rainy one day, she slipped and fell, and within no time at all, we had a call from a lawyer acting for her, saying, like, what's your insurance policy? And it was, as it turns out, it was for the common property, and it wasn't our direct concern, but you need those insurance policies in place.
I have to say, in my time managing shopping centres, slip and falls were a weekly occurrence. Like, that was a common thing to occur, whether it was, and then thinking the liability, like, did the cleaner not pick up that banana peel that lady slipped on and broke her hip, or, they slipped down the travelator. That was always another big one. But slip and falls at shopping centres and claims on that was probably one of the biggest part of management for shopping centres. And then consider that, like, on common property, common thoroughfare.
So in terms of the strata managers, the cost of the strata manager inside the levies, that's not a lot of money per unit, is it?
No. For the amount of work and correspondence a strata manager deals with, they're very underpaid.
Yeah.
Let's put it that way. Not the strata manager themselves, but fees. And this is a big hot topic of discussion. I think there needs to be, an increase in this. This is where, I guess a lot of them are trying to double dip with commissions and referral payments, which we've seen in the news.
So how much would a strata manager's fees add to someone's quarterly levies?
It wouldn't be much. You're probably looking at the cost of a cup of coffee a week.
Mm-hmm.
Per lot.
Per lot.
Yeah.
Be more than that, surely.
A lot of strata managers will try and make it up in additional services. And so it really depends. We just, listened to Amanda Farmer recently, who's just done a full review of 50 independent different strata management agreements and contracts to determine, which are the fairest and which are, irrelevant clauses and what they look like. So there's so many varying terms and not a lot of consistency. There's no regulation on how or what fees can be charged, so it's open to negotiation. It's a commercial negotiation.
What about talk to me about reserve funds? Like, I in the case of my nephew, there's a fair bit of money flowing into that reserve fund. What's that for, all about?
So I would say in that case that they have a 10-year maintenance plan in place, and they are forecasting per that maintenance plan of what needs to happen over the next 10 years. That there might be, in 2025, they might be painting the building. In 2026, they might be replacing a lift. In 2027, they might need to do an overhaul of fire services, or there's many different things, and depending what the building has. So always refer to the 10-year maintenance plan and get your head around that and understand, what the forecast entails. Have a look at what's in the reserve funds, what's in the kitty, and what do we need to keep operating over the next 10 years, looking at life cycle maintenance, preventative maintenance, and capital works that are going to be required.
And the big cost centres in a strata, what would they generally be? I'm thinking pools and lifts.
Yeah, look, pools and lifts, they pool electricity and water usage, as well as ongoing maintenance contracts and compliance. So those kind of things, it's not just operating a pool. There's many facets to what's going to cost you to operate the pool or the lift. The gym, the liability, the insurances on those things, the compliance checks, the regular maintenance that's required. For lifts, the emergency phones that are required, the lines to run those phones. It goes on and on. So although you think, oh, there's a lift, you don't stop and think, what cost does that lift come at?
So with both lifts and pools, there's the cost of maintenance of them, but then you've got to put money in to an account for depreciation, so that at some future point, I don't know, 20 years or something.
They call it 20 years to replace the lift.
You're going to have to replace it, and that is
pool.
going to be six figures as a starting point.
Yeah.
And a pool might not be quite that much, but it'll be an expensive exercise.
Yeah. Yeah, you still empty it, resurface it, etc. Make sure, you've got your weekly pool check to make sure it's safe to swim in, all that, the liability that comes with that. Again, keep an eye on the 10-year maintenance plan, and if you're buying into a scheme or in a scheme, where you're at to estimate your forecast. What does this look like for me as an owner? What do the levies look like today? What do they look like in 3 years' time? What do they look like in 10 years' time? Is my strata manager appropriately budgeting and forecasting the levies to keep it smooth, or are we going to see rise and dips based on the forecast?
If you owned a property with in a development with a pool or with a lift, if you didn't see a minimum of $100,000 in that reserve levy, you'd be going, there's not enough.
Well, it depends on where you're at in the life cycle of that building. Yeah. You know what I mean? If you're buying into a brand new development, there's going to be about 20 years of raising levies and forecasting for that.
Fair.
If you're buying in year 10 and the reserve fund is quite empty, and then all of a sudden you see that, hey, painting's going to happen, replacement of fencing's going to happen, pool needs to be resurfaced, whatever it is, that's when you may start having some concerns about the investment you're going to have to make in the upkeep and capital works.
And let's say that you get to year 20 and there's nothing in the reserve levy for the replacement of a lift, and the lift claps out and it has to be replaced. What happens then?
Yeah. So you would either have a special levy and everybody gets stung with a very substantial amount to facilitate the costs involved in replacing the lift, or you can look at loans for the strata company as well, but which in turn you'll have a special ongoing levy to pay off the loan on top of your admin and reserve funds.
So a strata company can take out a loan?
Yes.
Really? Okay. Mm-hmm. Through any bank?
No. Look, it's certain lenders, and I'll mention Lanark because they generally do. I'm not making any recommendations, but that would be generally Lanark would be generally the first port of call for loans. I've had a scenario at a building in Rockingham that was brand new. Developer went bust. It was over 4 stories, so there was no warranties involved, and it was the time of ACP, so aluminium composite panels.
That came as a surprise to a lot of people.
Came as a big surprise, and the insurance bill or lack of availability of insurance options because of it also came as a big surprise. So that strata company, being a new strata company, needing to get some major remediation works done, took out a loan at that time to quite quickly get through the replacement of the entire facade.
Wow.
Rope access, all the bits.
And sort of money to replace?
I think thinking about it at the time, the loan, this was going back quite a while. The loan amount was probably in the $1 million mark.
Wow. Okay. So those loan repayments get added to the levies?
Yep. Well, they'll be raised either as a special levy. If you're paying it in a once-off, you might have to put forward $80,000 as an example, or for the life of the loan. So in this, I've seen different scenarios where owners have agreed to pay a lump sum up front to cover the loan amount. And then I've seen others where it's been a repayment option over 10 or 15 years. A special levy will be raised at X per quarter to cover the loan repayments.
Wow. Wow, that's pretty heavy.
Yeah, it's dire, and you really want to understand it and have someone on your side that knows. But I think as a property owner, to really understand and see the value in what you're doing. Just because you buy into an apartment complex, it doesn't mean that you're not going to need to do the same kind of refurbishments and renovations. It's just at a larger scale, but there's more money in the pool. There's more purses to come out of, I guess. It's not all on you. But it's a hard pill to swallow.
Yeah, especially if it's not planned, like
Yeah.
those aluminium cladding.
Yeah.
That wasn't planned.
No, and things like that often come as a big surprise. You know, generally the trigger is being uninsurable. So generally the trigger will be, holy cow, we can't get insurance because of this.
Mhm.
The only way we're going to get insurance is if we take this action. And that's where the kicker sort of comes in. So being proactive and understanding the requirements in advance, knowing the materials and, warranties and things like that in place. There can be a lot of risk, but I think, owners should try and view it with the mindset of that adding the value to their home and their property.
Yeah, so there's a bunch of unit complexes around where there's ones down at 159 Hubert Street. There's some up at there's 53 Leonard Street, 69 to 71 King George Street. That back in the day, and I'm going back into the late 80s, early 90s. These were incredibly low strata levies, like minuscule.
Yeah.
And you think, wow, that's amazing. There's low strata levies, fantastic. We'll buy one. But the problem was, you roll forward 20 years, and suddenly you've got concrete cancer, you've got rusted balconies, you've got
Asbestos
lifts,
roofs,
asbestos roofs, you've got retaining walls that are starting to fall over. I think one of those complexes, the outer leaf of the building, you can actually see it. It's sort of like and you go, oh, there's some major work to be done there.
Yeah.
And that comes from a lack of maintenance in the early days. So I would argue that, I argue that you're better off having higher levies, putting some money in the bank, and having a proactive maintenance program
100%.
than low levies and then catch up with special levies.
100%. And this is, obviously legislation starting to catch up with 10-year maintenance plans. Strata managers are having to be a bit more astute or taking on facility management and commercial management practices in life cycle planning and understanding that. This is why reserve fund forecastings come into play. Building standards and legislation and compliance change all the time. So there's many factors that happen to make that occur, but it's really being proactive. I'm a big advocate on preventative maintenance. One of the first things I will do when I take on a new strata company is look at the maintenance schedule on all the new items, what it's going to look like, get your reserve fund forecast, and set put contracts in place for those regular requirements. Even things like you don't think about, soak wells. The amount of times like a new building will come on, it's a big building and people don't think to add budget for annual soak well maintenance and the things overflow.
Funny you should mention that, because in my nephew's courtyard, his paving is starting to dip. And there's obviously a soak well under there, and one of the lot owners said, "But that's on your land. You should fix it." And his response is, "Well, it's draining from your roof. I think you probably should help out."
Yeah.
And to your point, it's just one of those things that you don't. It's hidden. You don't even think about it.
Yeah. Yeah, that's it. Soak wells, pumps and hydraulics and things you don't see, but they're operating your building. And I guess not having that mind, we've got to have we're all in it together mindset in strata.
Mm-hmm.
We are all in it together. This budget is for all of us. The common property adds to the value of all of our property, although I might not personally use or be attached to that part of this issue. It's still applicable.
Is this all a deterrent for people to buy into a strata title, or is it the other way where you go, well, I'm always going to be living in something that is well maintained.
I would hope it becomes opportunity.
Mm-hmm.
I would like to, strata title is going to be a more common type of titling system. It's going to be a more common type of residence. It's got a lot to a lot to give in supporting our housing shortages and things, our, building urban centres, building community and the development side of things. I think strata is a great way for density and infill. But if you're going in like this lady who's coming from a 5-bedroom house who has no idea, you're going to be angry. You're going to, because you've kind of been blindsided into your kids convincing you to buy something that you didn't understand. So I think there's real importance in really understanding, ask the questions, inspect the records, get a buyer's agent to work through it, do your due diligence and checks, really understand. Read the Landgate WA Strata Living Guide as a starting point to just understand what buying in strata means, especially for those that are coming from downsizing and are so used to a certain way of life.
Yeah. And, this, I often relate it back to you own a property and you're doing all the maintenance, you're doing it all yourself. You go down to Bunnings and you spend $100 at Bunnings. You don't even think about these things because you're just spending the money.
Yeah.
But when you put it into a levy and then send out an invoice at the end of each quarter and you go, oh, it's $1,100 or it's $1,200 or whatever it is, you go, oh, like I'm spending too much money. But that levy includes your insurance, it includes your a whole bunch of maintenance.
Did a household budget and tallied up your Bunnings invoices and your annual insurance costs, your petrol in the lawnmower, whatever else it is that you're doing day by day.
Yes.
You're right. It's probably actually like a more cost-effective option and a done-for-you option.
Yeah.
I think it's a done-for-you option. And I think there's big merit in strata living. There's big merit.
Okay. Right, I'm going to subdivide. No, I'm not. I haven't finished mowing my lawns. So what are the other questions that you get asked often, Nick?
It can be the craziest, weirdest and wonderful things.
What's the weirdest question you've been asked?
Oh, where do I start? I don't know if I should mention it, but I've got one where an owner is looking to sell their property, but they want a refund of all the special levies because the works hasn't been done yet. Yeah. So, there's been a general meeting and levies have been raised and collected, but now that they're selling, they see the opportunity to get a refund of the whole lot. Trying to explain that is a bit tricky. I definitely see the reasoning. Other weird and wonderful things,
that is a flat no.
Well, flat no. Like it would need to go to a general meeting and, the owners would have to agree to refund it, but it would shortfall the owners. And think of the implication, from your perspective, Pete, for the buyer.
And then the buyer would have
and the disclosures have been made and everything. And then what happens to the buyer? They get lumped with this debt. It just, trying to, I think, it doesn't matter what the question is. It's trying to reason with people. And a lot of the time there is a lot of self-interest in a community of owners. There is, an individual with self-interest, and trying to get that individual on board, understand, empower them with education, make them see. And it's sometimes near impossible, and you've just got to sit there and handle the shit fight. You've just got to keep going back and forth and stand your ground. Like some things are just not going to happen and not going to happen on your timeline or, so I think the real difficult things are, or the questions that come about generated from self-interest or people's ideas of capitalizing on something.
Yeah. Yeah, okay. All right. So we've covered patios, sort of.
Yeah.
What about car parking, Nick?
Car parking. Yeah. So depending, obviously on the complex, what the visitors' bays are like, whether there's rules in place, whether there's a contract in place with your local council to issue fines, whether there's bylaws available to issue fines to lot owners, how that parking is monitored. There's a whole that could be a whole nother topic.
Yeah. So some developments, they've got the car parking as part of the lot.
Yeah.
So that is your lot.
That is your lot.
Well, not you can do whatever you want with it, but that's your lot and yours
That's right.
only, yeah?
Yeah.
And there are some older developments. For example, there's they're all over Perth.
Yeah, I had one that had 20
70s.
car bays for 18 units, but none of them were allocated. And it was great because we had plenty of parking enclosed, but none of it was allocated. But people still, want to say that one's closest to my unit, so it's my parking bay. Get out of it.
Yeah. And then how do you police that in terms of who can park in there?
Again, it comes down to bylaws. It comes down to the engagement of your strata council. It comes down to how it's being policed, the care factor at the end of the day.
Mm-hmm.
The local council might put a parking management agreement in place where a ranger can be called and come issued fines and things like that with the appropriate signage and agreement, and there's a cost for that. It may just be, Beryl in lot 1 saying such and such, and this is parking here. I've had situations where we've actually, as part of the registration process of lot owners, taken their number plates to know whose number plate belongs to what lot. So it really depends on how far and how much time and energy is going into policing that. And it can be an issue. I saw one on our licensees page the other day where a poor property manager had someone, whether it was an abandoned vehicle, they were just parked in this rentals lot and it was their bay, and strata company couldn't do anything about it. The police couldn't do anything about it. It was on private property. It was like, was it abandoned? They didn't know. It really can get quite complicated. And gone are the days where, I used to manage a lot of apartments with wheel clamping, but that's not really a thing anymore. You can't do it. No. But that was a very good deterrent.
Yeah, it was.
And it was a great moneymaker for the wheel clampers, I'll tell you. Yeah. And even as the strata manager, I would pack my DAX if I was outstaying my welcome in those car bays. And I've been clamped a couple of times at some schemes. So, it's common courtesy.
You've got mobs like parking enforcement services now.
Yeah.
And they send you out a fine, $60 or something like that. And my advice to people is just don't pay it. Like, what?
I don't know, Pete. I'm a good citizen. If I do the wrong thing, I need to remedy it.
What are they going to do?
Yeah.
They're a toothless tiger, aren't they? They can't do anything.
I can't comment, but
what are they going to do? Take you to court for $60?
Fines, they may take debt collection action. They may wait till it gets to a certain amount. I'm not sure. I'm not in that field. If it's a bylaw that says you get a fine and it's charged through the strata company, then yes, you will get charged interest and you will go through debt collection.
I was at Curtin University back in 2008 or something, and I got this parking fine down there and it was only $20 or something, $40 or something. And I went, no, I'm not going to pay. What are you going to do? Take me to court for $20 or something? And obviously they were never going to take me to court. And then come graduation time, they go,
you've got an outstanding fine. Yeah.
Do you want to get graduated?
And that's it, isn't it? It's time to sell my unit, and come time to sell your unit, well, hey, Pete, as a settlement agent, here's your certificate 110. Here's everything owing to the strata company before you get a cut.
Is that right? Oh, my God. Oh, that'll jar you. Yeah, okay. Yeah.
Yeah, own invoices. You've seen it as a settlement agent. You've seen outstanding balances get paid before settlement.
Yeah. Okay, fair enough. Okay, they get their money one way.
Yeah, but you know what? Maybe bring a parking inspector on to the show to talk about this. I'd be keen to sit in on that conversation and have a laugh and understand. But I also, from a strata manager perspective, where you're trying to work in governance and working with your strata councils and the bylaws and things like that, I don't really want to be promoting don't pay your fines. I'd want to be promoting do the right thing, be a good community member. Don't park if it's not there yet.
Well, so in our building at work, there's a couple of areas of common property that they're not used.
Yeah.
And so I just park there.
Yeah.
And I got some of the owners, they go, hey, you're not supposed to park there. I go, well, tow me. Tow my car away. You're not going to do it, are you?
Yeah, Pete, you are badass. You are
I don't think so. But I to your point about, instead of getting bent around the axles about rules, get bent around the axles about making the community a good place to live.
Yeah, harmonious living. That's what that sometimes apply common sense. Sometimes give a bit of leadway.
Yeah.
Have some leniency.
That's
this
my
is
message.
People's lives and homes, and we want them to be happy and comfortable and harmonious. I don't want to be the police. I don't feel good issuing fines because you're parking in the wrong spot. Just don't do it. And you won't be upsetting anyone else, and you'll all live happily and you can share a cup of sugar and do whatever it takes.
Yeah.
But the real message, Pete, like you said, is be a good community member. If you're living in a community, be a good community member.
Yes. Nick, that's, I think, about all we've got time for today. This has been good.
Thanks.
You're always you tell a good story, and you're passionate about your subject, which is
I want to make it better for everyone. I want to see the industry's mindset shift and change and be better and do better, and that's why I do what I do. I don't enjoy those daily phone calls. I don't enjoy being treated like crap because I've sent an invoice or a breach or whatever. I want to see it get better. That's my why.
Yeah. On that note, thank you. And that wraps up another episode of the WA Property Q&A. We hope you found our discussion valuable and gained some valuable insights into the world of property buying in Western Australia. Remember, while we strive to provide useful information, it's crucial to consult with the appropriate professionals before making any investment decisions. Don't forget to tune in next week for another exciting episode where we continue to unravel the mysteries of the WA property market. If you have any questions or topic suggestions, feel free to reach out to us. Until then, happy property hunting, and remember to seek the right advice for your personal circumstances. Thank you for listening.